Construction firms are collapsing after a loss-making boom. Today, we're going to have a look into the construction industry and what's actually going on, having a look at it from the top. So we're seeing that there's a collapse of a number of construction firms recently after a loss-making boom, and massive greed is being blamed for it. So we've seen a property developer based on the Gold Coast who has 4 decades of experiencing boom and bust cycles, blaming the current woes to one simple reason, and that's greed. He said that massive greed is the real reason that we're having issues in the construction industry and the blames for its current woes. And what we've seen in the last 24 months is really a perfect storm. We saw government stimulus through home builder grant. We saw pent-up demand, where we can see here with private dwellings that have commenced really in the last 24 months, peaked at 42,000, averaging around 30,000. So we saw a massive peak in construction demand for new dwellings, new houses, and other residential properties. So that might be renovations. So that was massively high. And we saw a number of builders, Metricon, a bunch of them, sign up a huge number of builds. So we can see here in Victoria, there were 60,000 starts in 2020 to constructions, 49,000 New South Wales, 29,000 in Queensland. So we saw a massive increase in buildings that were started, new construction. And at the same time, we can see here the number of enterprises, which was sitting around 2017, 18, sitting around the 48,000 enterprises. That increased. So we peaked at about 54,000 new enterprises. And I guess the revenue in terms of billions of dollars didn't exactly increase at the same rate. So we saw a bunch of entities, a bunch of builders competing for this new business because it was really a boom. There was new opportunities. Those that weren't in the industry were jumping in, trying to make the most of it. And we've seen currently now the woes, a bunch of builders going bankrupt, and mainly being brought down to one is greed. I don't think it was necessarily greed, but it came down to building costs increases. So we saw key materials such as steel, timber, they lifted by 40% in only 1 year. And although the big developers can negotiate better and smaller prices, it made it really challenging because builders had committed to building contracts with people looking to build, and those costs increased. And when they increased, they absorbed the costs. One thing I don't really understand here is why the builders, when they didn't, they knew they had the customer locked in, they had the fixed price building contract locked in, why they didn't lock away their cost of materials at that point in time? Why did they wait till they started the build and then they absorbed the costs? So that's one thing we found out from this, that a number of builders had locked in customers. They locked in a bunch of customers, but didn't actually end up getting materials until they were closer to the actual build starting. And that contributed to a lot of their demise. So that's one thing that has come out of this. The developer on the Gold Coast says that greed is an issue. No doubtably, greed played its part. But as we saw, there was a massive increase in enterprises. So people were competing. People had to keep their costs low. They operated on a very thin margin, and they needed to keep the builds coming. So as a result, a lot of builders committed to projects. They locked themselves in for fixed price contracts. And when the prices increased, we saw their steel and timber up 40% in 12 months. They weren't able to pass that on to their customers or the people that they're building for because the contracts were built in. They're locked in. So they ended up getting in a position where their margins were squeezed and there was a massive loss. So continuing on from that, we can see here that the predictions are that there's going to be more builders to topple in the coming months. We've seen a number of people talk about the fixed price contracts and the issues it's caused. In the past, the fixed price contracts worked really well. There's something that the banks only want to deal with. So if you're looking to build, the banks aren't keen to do it any other way. So it's not actually a product of the builder's fault. It's more a product of the bank's fault, because the bank wants to make sure they're giving you all this money. They want a fixed price building contract because they know what they're going to get at the end of the day. They know they're going to get an end product, and they know when they approve the loan, the funding that's being set aside for the loan will cover the full cost of the build, and they'll have an end product at the end of it. Worked really well up until massive increases in prices, builders being locked in at these fixed price contracts, which has been a massive part and cause of the issue. So supply chains became constrained, the cost of building materials shot up, and builders weren't knocking back work. And they simply kept on signing new customers. They asked existing customers for advanced payments to fund the higher building costs. So it became sort of a Ponzi scheme, I guess you could call it, where they were using existing builds that they were losing money on, advancing to cover their costs for the loss they were making, and trying to really keep it together whilst in the background everything was going haywire. And we can see consumers actually flock to the market. We talked about it before. We can see a massive increase of consumers that nearly up 50% in 12-month period. So we saw a massive increase there. We also saw a massive increase of enterprises entering the market to help out with this new demand, and ultra low interest rates. People were expecting rates to stay low. We saw stimulus through COVID pandemic support, measures such as a home build grant, which helped people finally realize their ability to build their dream home. I guess suddenly what you found is the builders were locked into these fixed price contracts, which quickly became a burden. And for many builders, it meant that they signed fixed price contracts. And as we talked about earlier, they hadn't locked in their own prices with suppliers. And this is where the loss-making boom really became too hard to manage. And a lot of builders were driven to the brink or actually fell over. I talked about it before. It doesn't really make sense to me. And it might be a capital thing. The builders didn't have enough capital to fund it, understanding that build costs are quite high. But the fact that they lock clients in, they didn't necessarily lock in their costs of the build until they're a little bit closer, meant that they opened themselves up to this massive risk where they're expecting timber to be here, but ended up being 40% higher. And when they're only operating on a 20 or 30% profit margin, a 40% increase on timber, steel is a big deal. So we can see how that played a massive part. We saw recently Langford Jones, they went bust. We've done a story on them, and Bruce Langford, who is the director, said that the problem is that fixed price contracts and the costs going up by 40%. That's absolutely it. Builders, tried to hang on, and they're currently just hanging on. And it really is a big issue, the fixed price contracts, and the builders not managing it in a way that would lead a lot of people to believe that once you lock in the contract, surely their costs are locked in at that point in time, which they weren't. Now, Langford Jones, they were a reputable builder as well. They had over 45 years experience in the Bayside and eastern suburbs of Melbourne, also working in some regional areas such as Phillip Island, etc. In the 30th of June, they actually went bankrupt. We did a story on Donna Taylor. She talked about how that it's ruined her life. She lost over 150,000 on that. We did a video here. We actually saw Donna left a comment on our YouTube channel. Would love to have Donna on the show to explain her story and maybe give some feedback to those that are considering building, because there are inherent risks there, and would love to understand what could potentially be done, because she talks about her building contract and how it was loaded with, I guess, the earlier stages of the build had a lot more of the payments up front, which meant when Langford Jones went bankrupt, obviously then there wasn't much cash left in the deal to complete the construction. We can see here she's got the frame up, etc. Now, we are seeing a double whammy of sorts. We're seeing a massive collapse in builders. To name a few, we saw ProBuild, PlanBuild, Condev, Tono, Mullabry, BA Murphy, Inside Out Construction, and a bunch of other builders that have already gone into liquidation or bust. We've seen other companies, they've been holding on by a thread. They're cutting costs. We've seen government support being handed out, the biggest in the industry, none other than Metricon. They've been teetering on the edge of collapse since May. They've been lent a hand. They sacked a bunch of staff. They got to restructure some of their lending with CommBank. They also got government support. So we're seeing that the demise of this industry really happening as building costs soared. We saw delays through the pandemic. We saw labor prices skyrocket. Just looking at a bunch of things here, reinforcing steel up 42%, steel beams up 37%, structural timber 40% increase. We saw timber windows up 31%, terracotta tiles up 26%, and even labor costs. So unfortunately for the builders, they'll hit from every angle. If it wasn't the cost of materials or the cost of labor, they had delays. There was, in some areas in Queensland, New South Wales, rain delays. So it was a really, really difficult situation and an unfortunate one for a lot of builders up there. It's been estimated that up to 9% of construction firms are expected to go broke this financial year that we're in at the moment, based on IBISWorld data. And it's currently certainly a very challenging time for those out there. We can see here the HIA industry report found that in 2021 to 2022, there was increased costs for things like bricklayers. So we can see a 16.4% increase on bricklayers, carpenters 12.5%, painters 12.2%, plasterers up by 10%. That's a huge increase on costs just for general labor throughout the build. You've got a bunch of different steps involved, which all add up. We talked about another thing that, there was a massive increase on entities and enterprises that came into the fray as the building industry really got competitive. And it meant that a lot of these builders were forced to get into contracts, but they might have been in a position where they had to fill so many builds because they got people behind them, families to feed. They've got to get people locked in. And the prices that, more entities, more competition that was happening, they didn't really see this coming. So definitely a really challenging time. Guys, if you have any questions, leave a comment below. Donna Taylor, if you're out there, hit us up. We'd love to have a chat with you and get you on the show and share your story with us. So thanks for joining us today. We'll see you again soon.